Joining me now is Portfolio Wealth Advisors President and Chief Investment Officer Lee Munson. Lee, good to see you. Thank you so much for being here. Let's start with this big trade announcement that we're expecting this morning at 10 a.m. Eastern. A lot of speculation that it will be with the United Kingdom. The UK is important, certainly, and the United States is the UK's largest trading partner. Would that be enough to move markets and put people at ease here? What's your take?
Oh, I think absolutely. I just need a trade deal of any big, rich country. You know, I'd love to see Japan first, but the UK breaks that ice. Now, I think the main thing that people have to remember is we're not really seeing the slowdown that people were saying a couple months ago. We're not seeing empty shelves yet. I think the whole shipping thing is a lie. But look at what markets did. You know, we've got such a good reaction to every time Trump has any positive news on trade. I think this is going to be a net positive, and I think it's going to signal to people we're going to see a lot of trade deals come out over the next 30 days. And again, why is that so important? Because if we don't get these trade deals, then Congress is not likely to give us the tax cuts and the deregulation that's going to move the market ahead despite some of the growth slowdowns we're going to get no matter what we make in this trade deal going forward over the spring and summer months.
Yeah, I mean, we will hear more deals, certainly, and I think Japan is probably in the top three or so. Let's talk Federal Reserve for a moment, because interest rates this morning are trading like this. The Federal Reserve, of course, left interest rates unchanged yesterday, as expected during the policy meeting. But Federal Reserve Chairman Jay Powell explained his decision while also talking about some rough roads ahead. Watch this.
The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment.
This is the third straight meeting where the Fed has not moved on rates. The next Fed meeting is set for June 17th and 18th. Mark Tepper, jump in here. You know, here he is, Jay Powell, talking about the risks of inflation and unemployment rising. Well, then how come you didn't cut rates, bud?
Yeah, so, I mean, it seems like the Fed and Jay Powell, like, they're okay with being late. And then when they end up being late, they're going to be aggressively late, right? So they'll aggressively cut another bazooka cut or something like that, 50 basis points, 75 basis points. But obviously, you know, it is difficult for them to plan in lower interest rates given the uncertainty of the tariff landscape, Lee. You know, obviously, if there were tax cuts or tax hikes that were passed by Congress, it would be easier for the Fed to plan. But when we can easily see a trade deal possibly at 10 a.m., which takes a lot of that unknown like off the table, that makes it a little more difficult. What's your take on what the Fed should be doing?
Well, I think, you know, I'm with the Fed here. I know we all want low rates, and I'm all for that. But the Fed's going to work on hard data. And I've been saying for the last month or so, the hard data doesn't support this apocalyptic view that global trade has stopped, which it has not, right? We've got a 90-day pause. China is an absolute big issue, and this will slow growth this year. And I think that's what the markets were doing in March. We're adjusting for a little off the table. But, you know, at the end of the day, I think that people are too bearish on earnings expectations. And I think that I want to see unemployment actually happen. And I do agree with you. The Fed can cut rates rapidly, but until they see it happen, soft data and sentiment in polls, that's not the real deal right now, and they're just not going to budge.
Well, what's going on with the 10-year, Lee? I mean, you're talking about the 10-year now up to 4.3%. Futures market is still pricing in a 72% chance that we'll get a cut in rates in July. So why are rates going higher?
Well, I think that there's just so much uncertainty and volatility. I myself, listen, I'm long duration. I'm long the 30-year. I've got my eye on the 10-year. We've seen that it can come down. But right now, with this uncertainty, I think Treasury markets, they're just a different beast right now. And it bothers me. It bothers me deeply because I feel I should be making more money on my 30-year Treasury position.
Yeah.
But until we get trade deals, everything is off the table. You take your finance books, you throw them out the window, and until we get 2 or 3 trade deals, my treasuries aren't going to be trading like they should be, which is yields coming down because of slightly slower growth, slightly more headwinds because of the China problem. But at the end of the day, global trade is moving, and even 8% earnings growth this year will get the market back up to 6,000 or higher.
Yeah.
But this idea that we're going to have 0%, that was a bunch of fear from 30 days ago. Old news.
I mean, you said that there's too much fear around earnings. A lot of people were expecting estimates to come way down. We've got a packed day of quarterly earnings again. Warner Brothers Discovery, ConocoPhillips, Shopify, Peloton, restaurant brands all out today. Then you've got Paramount Global and News Corp out after the bell. 85% of the S&P 500 companies have now reported. So, Lee, how would you assess the earnings period now that we've seen the bulk of them for this quarter?
Well, let me tell you, I saw you, maybe a month ago, and I was so wrong when I suggested we were going to have almost no forward earnings. I mean, remember a few weeks ago, we thought, how could any CEO give forward? I was completely wrong. We've had lots of forward earnings. We've had lots of CEOs come out. Yes, there's going to be a slowdown. Yes, they're concerned about the consumer, but has consumer really done with their feet what they're doing with their lips? No. So I'm very impressed that CEOs have come out, given reasonable forward guidance, been reasonable and realistic about the risks. I think this has been a great earnings season compared to what we thought was going to happen just a few weeks ago.
Yeah, all right. All good points. Great to see you, Lee. Thanks so much.
Thank you.
All right, Lee Munson joining us. Quick break and then